Chapter 9: Accounting for Non-Current Asset. For this chapter, we will cover definition and type of non-current asset and cost of fixed asset. Non-current asset, the characteristic of non-current asset. The first one, physical substance. Second one, used in the operation of business. The third one is not intended for sale to the customer. And the fourth characteristic expected to be used for a number of years. There is two types of non-current asset. The first one is tangible non-current asset. Tangible non-current asset is the physical asset acquired to carry on the business. Example of the tangible non-current asset: land, vehicles, equipment, machinery, and building. Another type of non-current asset is intangible non-current asset. Intangible non-current asset is a resources that cannot be held or touched, but the asset could give a future benefit to the company. Example: brands, goodwill, patent, trademark, and knowledge. How determine a fixed asset cost? All expenditure necessary to acquire the asset and make it ready for its intended use. Purchase price, title and attorney fees, real estate broker's commission, accrued property tax, clearing, draining, and grading costs, demolition and removal costs. Journal entry: debit will be land and credit will be cash. And the narrator to record purchase of land. This will be the example. This company acquire real estate at cash cost of 100,000 ringgit. The property contains an old warehouse that is raised at the net cost of 6,000. Additional expenditures are at attorney fees 1,000 and the real estate broker's commission 8,000. Calculation will be include cash of price of the property, removal of old warehouse, attorney fees, real estate broker commission. So the total cash price will be 115,000. And the journal will be debit, land, and credit, cash. To record purchase of land. For example of the land improvement, structural addition made to land, driveway and paving, parking lot, fence and lighting, landscaping, underground sprinkle. So the journal entry will be debit, land, and credit will be cash. For the cost of building, which is the cost to make a building ready for its intended use, determination of fixed asset cost will be include purchase price, title and attorney fees, real estate broker commission, remodeling and replacing, repairing the roof or floor, electrical wiring and plumbing. So journal entry will be debit, building, and credit, cash. For equipment, fixed asset used in the operation is including the cost of purchase price, Sales tax, freight charges and insurance during transit, assembling, installing and testing, electrical wiring and plumbing, painting and littering, and general entry will be debit, equipment, credit will be cash. This will be the example to calculate the cost of an asset. Mama company purchased factory machine at a cash price of 50,000. Related expenditure are for the sales tax 3,000, insurance during shipping 500, and installation and testing 1,000. So the calculation will be include cash price, sales tax, insurance during shipping, installation and testing. The cost of purchase is 54,500 ringgit. So the general will be debit, machinery, credit will be the cash. How to identify expenditure during the useful life? It must be an ordinary repair, maintain the operating efficiency and productive life of the unit, usually a small amount that occurred frequently, often referred to as revenue expenditure. Example, motor tune up and oil changes, painting the building. So the entry will be debit, maintaining and repair expenses, credit will be cash. How about the expenditure during the useful life? Include operating efficiency, productive capacity, and useful life of asset, usually mature in amount and occur infrequently, often referred to as a capital expenditure. The entry debit will be the equipment, building or land, credit will be cash. That's all for now for the chapter 9. Thank you very much.